Online gaming. Sources say the bill could propose a complete ban on online betting. Adds that the bill is likely to be introduced in Parliament tomorrow.
D2C baby products brand R for Rabbit bags $27 million in a Series B round. The round was co-led by Filter Capital and 314 Capital, with early investor Exponential Capital exiting. Startup to use the funds to accelerate growth and drive product innovation.
Brand Bluestone lists at a 3% discount to its issue price, with the stock ends 6% higher in trade. The company will use these proceeds to fund its working capital requirements.
Polestar Analytics bags $12.5 million in growth capital from a consortium of US-based family office and institutional investors. The funds will be used to further deepen the firm's AI capabilities and reinforce the development of its proprietary One platform.
The House of Biryan adds 32 crore rupees to its cart in a growth round. Cricket icon MS Dhoni backs the firm, along with Best Vantage Investments and other angel investors. The firm, which operates 22 kitchens, is EBITDA positive in its core markets.
On what's brewing today, Bengaluru-based Refold AI has emerged from stealth with $6.5 million in seed funding led by ENIAC Ventures and Tidal Ventures. The startup is tackling one of enterprise software's biggest pain points, API integrations, a problem that costs companies an estimated $350 billion a year in consultants and manual fixes. Refold replaces that patchwork with autonomous AI agents that learn, build, and maintain system connections on their own. Already working with over 30 paying enterprise customers and processing more than 30 million API calls a month, Refold is positioning itself as the invisible logic layer powering the next generation of enterprise software. Joining me now to discuss this further is Jugal Anchalia, the co-founder and CEO of Refold AI. Jugal, thank you so much for taking time out and being here with us on Startup Street. You know, this company emerged from your previous venture, JustDoc, which was sold to NetMeds in 2018, right? So talk to us about how you decided to start Refold.
First of all, thank you so much, Arundhati, for having me here. It's a pleasure to be here. So after, selling JustDoc to NetMeds, NetMeds further got acquired by Reliance. We kind of saw a lot of enterprise systems, that were being used, especially around ERPs. And we, sort of saw a lot of consultants being pulled in for manual operations around these integrations. That gave us an insight that enterprise integrations is fairly, it runs on old systems. And when we saw the potential of AI automating and generating integration code, we kind of put two and two together. And, that's how we started Refold AI.
Sure. And, you're sort of replacing expensive consultants and integrators with AI agents, right? So how exactly do these autonomous agents work in practice?
So, basically, integration has been dominated by system integrators and consultants who kind of are trained historically over the years on these complex systems like SAP and Oracle. So what we have done is we have taken the SAP operating manual and, trained these agents on top of that. So agents can write custom integration code, they can automatically test it, and finally humans can just oversee and then deploy it into actual production use.
Sure. And, you've raised the $6.5 million coming out of stealth. What's sort of the immediate roadmap for Refold AI with this fresh capital?
Yeah, this helps us in two ways. Almost half of it is, in accelerating our go-to-market motion and expanding globally. We have customers already across the world, and we see it as a potential where we can take it, to different markets. And almost half of the funds would also be used to drive our R&D and, AI research further, so that we can add more connectors inside the platform.
Sure. And, Refold already has 30 paying enterprise customers. It's been about two months since you started and about 1,500 active users, right? So what do you think is driving this early traction?
So we are seeing a lot of demand from the market. Integration fundamentally are a very core problem around enterprises. A lot of enterprises are adopting AI, but AI needs data or data connectivity to basically run those models. Every enterprise that we are talking to has a fundamental need where current existing integrations are broken, slow, or they are human dependent. So basically, that's kind of driving the need, and AI has amplified, our go-to-market here.
Sure. And the enterprise integration market is already crowded with sort of lots of legacy players, right? How does Refold sort of differentiate itself from players like, MuleSoft or Boom?
Yeah, so there are a lot of legacy systems that were created to automate integrations, but they are still manual, and they are not they don't leverage AI in the way we envisage. So you can think about it in this way that two systems need to talk to each other, and there is a lot of customization that goes on. Like, two enterprises don't look the same. They have, even though they use the similar systems, they have a very different settings. So the legacy systems were tuned to kind of like unify those experiences, but we are embracing the customized nature of these enterprises, and AI is helping us write that custom code, or basically just like tackle those issues as we go on.
Sure. And, you talk about sort of flipping incentives by eliminating the complexity instead of billing for it, right? Can you sort of explain how your business model sort of works, and where do you hope to, sort of end this year?
Yeah, basically, traditionally, the industry has been designed in a way where, these integration workflows are sort of built by human consultants or system integrators that bill it by the hour. And they kind of like the longer the projects run, the more money they make. That's the traditional structure of these integrations. But AI kind of like has empowered us to shift more towards an outcome-based model. So we have an incentive to deliver the projects faster, and the faster it gets delivered, the more integration workloads can be taken by the AI agents, and the faster we grow. So it's basically the flipping of incentives in that sense.
Sure. And looking ahead, how do you see Refold's role in the AI native enterprise stack? Could it truly become that invisible logic player powering business workflows? What's, the sort of 1 year to 2 year growth roadmap for you?
Yeah, we have already grown almost like 6x in last year, and we are on a trajectory to grow further this year, with similar numbers. We feel we are becoming that glue between two systems that talk to each other. And in the age of AI, this is becoming very, very fundamental. Systems need to talk to each other. Enterprise software companies are building capabilities around AI, but the data connectivity is still running on the age-old APIs, which break oftentimes. So there is a huge opportunity in front of us, and we are really excited about that.
So a huge opportunity in front of you. All right, Jugal, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on your journey going forward.
Yeah, thank you so much.
Well, in what else is brewing today, B2B Quick Commerce platform Fairdeal Market has raised $3 million in a pre-Series A funding round that was led by Incubate Fund Asia and Waterbridge Ventures. Co-founded in 2022 by two brothers hailing from Jaipur, the company says it is approaching $10 million in ARR and plans to build a platform of highly loyal 1 lakh retailers in the next 3 years. The fresh funds will help it deepen its technology moat, expand in new zones, and onboard more D2C and regional hero brands. For more on the funding and the company's growth roadmap, joining me now is its co-founder and CEO, Prateek Bansal. Prateek, welcome to Startup Street. Thanks very much for being here. Tell us very briefly about Fairdeal and the size of the opportunity in this B2B quick commerce market and the market gap really that you're solving for.
Sure. Firstly, thank you so much for having me here. Quickly, what we are trying to solve at Fairdeal. So in India, there are almost 40 to 50 lakh retailers, which actually goes to wholesale market every day to procure their inventory. With Fairdeal now, they don't have to actually go to wholesale market. They can open the Fairdeal app and get their goods delivered instantly at their doorstep. So this is what we are solving for Indian retailers.
Yeah. Okay, and now that you've got this $3 million check, where will the bulk of this money grow? And when you're talking about expansion beyond Delhi NCR, where would that be?
Sure. So for at least next 2 years, we would stick to Delhi NCR. Post that, we will look at markets like Bombay and Bangalore, which are again very densely populated market. For us, it is very important to enter into a market which is very densely populated.
Well, and the rest of the money, how will you be deploying the funding apart from the expansion plans that you've detailed?
Sure. So we are also exploring some new categories. Currently, we only operate in food and beverages as a category. We are looking to expand few more categories, which would be non-food. So some of the money which we have raised will go towards category expansion, and yes, rest of the money would be used to develop the infra for reaching to 1 lakh retailers in next 3 years.
All right. Okay, got that. I read that you say that data is going to be your moat. I mean, that will defend you against competitors. What exactly do you mean by that in terms of what you're doing differently?
Sure. So for us, data is everything, right? Whenever we enter into a market, firstly, we understand with the help of data what actually sells there, what is the pack size, which are the brands which are actually selling there, and that help us to plan the GTM for that market. And post launch, right, we again see that data, that what is selling, and then we continue to go deep on the assortment which is selling, right? So data is our core that remains on the center for Fairdeal. And let me tell you, within past 1 year, we have grown almost 10x uh, in a very capital efficient manner. And that is only possible because we use a lot of data, right, which we were generating while doing that transaction with these retailers. So yes, data remains the core for Fairdeal.
Well, a 10x growth in the first year is impressive, but then again, it's coming on a small base. You're already at 10 million ARR today, and you're targeting now 150 million in the next 3 years. What exactly is going to get you there? Of course, you're going to be using data, like you said, but what is the sort of roadmap you have for growth over the next few years, if you could give us a glimpse?
Sure. So as I said, for next 2 years, we will stick to NCR as a region. In NCR, we see
Yeah.
we will be able to reach almost to 60 to 80,000 unique retailers. Again, we are more focused to build a loyal relationship with our users rather acquiring more and more users. So loyalty remains our top focus. So once we reach that 60,000 to 80,000 unique retailers in NCR, we would then start with our new markets, which is Bombay and Bangalore. So with these four core markets, right, which are top market for any Indian consumption economy, right? So we are targeting these three markets to reach to 150 million ARR.
Okay, got that, Prateek. There is this target you've set of onboarding 100,000 loyal retailers within 3 years. What sort of incentives or tools are you offering to ensure that there is stickiness? And, how do you identify these hero D2C regional brands? Just tell us a bit about that as well.
Sure. So, firstly, how do we make loyal retailers, right? That is very important to understand. So, we provide quick delivery. So, our moat is they get instant delivery, let's say within 1 hour. So, they don't have to actually bother about their working capital, which makes the retailer loyal to Fairdeal, right? And how do we target these hero D2C brands? So, firstly, we check what is selling, which brands are selling on the other platforms, could be even Amazon or Blinkit of the world. And then we try to check whether these brands are eligible to sell on our platform or are able to sell at our retailers. So we try to marry some data, right? And again, data remains the core while selecting any brand. And once we understand that, we launch that brand and try to make it a hero brand.
Got that, Prateek. Thank you very much for sharing all of that, and we wish you the best, with your growth plans ahead. Thanks very much for your time today.
Thank you for having me. Thank you.
Moving on, India's manufacturing sector is at a strategic inflection point and is poised for significant growth. Sample this. Manufacturing value added is projected to touch $1.3 trillion by FY30 from the current $471 billion. The growth is fueled by strong policy support as well as the fact that India benefits from a large and rapidly expanding engineering workforce. Speaking to CNBC-TV18's Parikshit Luthra, Prashant Prakash of Accel Partners talks about advanced manufacturing and the top bets in the space. Take a look.
Advanced manufacturing is not just assembling and just putting together components that are just imported from across the world. Advanced manufacturing is rooted in IP. It is engineering first, and it typically requires multiple modes when it comes to design, when it comes to being able to do fabless chips, and multiple other components that makes it non-trivial, and that's what is highly valued today, both in India and the rest of the world. In advanced manufacturing, what are the interesting spaces for Accel and in general globally now? I would say aerospace and defense would be at the top. I think this whole idea of defense warfare totally changing. We have seen it in Operation Sindoor. We've seen it in the Ukraine. So I think they are fast moving towards UAV, drones, counter drones, all kinds of electronics being applied and precision manufacturing being applied in defense and aerospace. So that's a huge area. The second big space is in specialty chemicals, where we have more advanced APIs and the need to replace and a lot of global imports. So that's the second area. The third would be, in general, electrical and electronics design. There is a huge import bill for us in importing chips. And it's one thing to build fabs in India, but we also need to be able to have the type of design capabilities to build and replace some of those semiconductors from our country. And finally, the EV supply chain. We are a huge automobile exporter. We have to quickly transition towards having a significant component of that supply chain also being electrical EV first. So I think there's a huge opportunity there. So these are some areas, and we are starting to see startups. The supply of startups in these areas is definitely gone up 10x in the last 12 to 18 months.
All right, moving on to the big story that we're tracking today in the startup space. It is a big blow to online gaming companies. We understand from sources that the government is looking at regulating online gaming by barring people from offering money to play online games. Ashmit, has been picking up details on this and joins in now. Ashmit, tell us, what exactly is the government proposing and how will this impact the sector?
Well, this could be curtains as far as the online real money game space is concerned. That's what sources are telling us. The bill, we understand, which is likely to be tabled tomorrow before the parliament, is likely to provide for sweeping restrictions as far as online real money gaming is concerned. There was initially an anticipation that perhaps it targets only betting and not real money gaming. But what sources tell us is that the language of the bill is such that it's likely to provide for sweeping restrictions. So that effectively means that any person, it's likely to have prohibition, a bar on any person or entity providing real money gaming services. It's likely to provide a bar on any person from advertising or promoting such products and services. It's likely to, in fact, also bar any bank or financial institution from providing transactions to allow flow from money from the user to such entities, to such platforms. There are also likely to be penal consequences, which will be likely be a part of this bill. Penal consequences to the tune of 3 years in jail, penalties as high as 1 crore rupees in case of non-compliance, in case of violation of the provisions of such bill. And that's not all. The bill is also likely to provide conditions that any company which is found to be violating such provisions, the officials of those companies can also be proceeded against. These, of course, what sources confirming. We're yet to see the bill that is actually likely to be tabled before the parliament and how the parliament chooses to respond.
All right, Ashmit, many thanks for taking us through those details. On that note, it is time for us to head into a short break. Coming up on the other side, Indian online gaming platform Games 24/7 has launched the third edition of TechXpedite, a 90-day program to support early-stage AI startups. We put the company's co-founder and CEO on the hot seat to find out more. Stay tuned. Welcome back to Startup Street. India's startup ecosystem is the third largest in the world with over 1.76 lakh registered startups. Fueling this momentum, Games 24/7 has launched the third edition of its flagship accelerator program, TechXpedite. The 90-day program will back early-stage startups across AI for skills, gaming and sports, and inclusive technology, offering mentorship, masterclasses and strategic investments for the top 3 startups. Joining us now to talk about TechXpedite 3.0 and the opportunities ahead for Indian entrepreneurs is Bhavin Pandya, the co-founder and co-CEO of Games 24/7. Bhavin, welcome back to Startup Street. Like I mentioned, you've announced the third edition of TechXpedite. What's the vision behind this accelerator and how has it evolved since the first edition in 2023?
First of all, thank you for having me on the show. And I'm really pleased that we are announcing TechXpedite 3.0. It's, of course, going to be bigger and better than the first 2 versions. The first one was focused mainly on gaming. Since then, we've added inclusive tech. AI obviously is really key to what we're doing, and obviously our focus is on continues to be on gaming because that's where we're experts. So we're going to do this time. We have three different cohorts that we're focusing on. The first one being AI for skill development. The other one being gaming and sports, obviously, and the third one being inclusive tech. So those are some of the things that we're working on.
Sure. So like you mentioned, the focus is on AI for skills, gaming and sports and inclusive technology. Bhavin, tell us why these 3 themes and what kind of innovations are you hoping to see from startups?
So these 3 themes, like I said, mainly because AI, I think, is here and now and is going to stay and is going to revolutionize our lives in more ways than one. And so it's the right thing to do is to be current, is to sort of ride this wave. Gaming, because that's where our expertise is, and gaming is growing very, very handsomely, continuously, especially in India. And last but not the least, I think there's a lot to be said and done about the use of technology in helping people who don't have all the capabilities that most people have.
You know, Bhavin, for startups listening in, what sets TechXpedite apart from other accelerators? Can you break down the kind of mentorship, masterclasses, and hands-on support that participants will receive?
Sure. The biggest thing that we noticed was that funding was available in India. There were enough and more companies or entities that were willing to fund people. But what was not available was real mentorship. Okay, these are the kinds of problems. How do you tackle them? How do you solve this technology issue? How do you solve this go-to-market issue? And I think that's where TechXpedite really stands out, where we've been there, done that, and that's what we're sharing directly with fellow entrepreneurs who want to also establish themselves here. Not to mention that we're also making connections and giving them the inroads to get funds and receive funding. We ourselves are, like you said, for the top three entrepreneurs this year, going to put in a check and also are in advanced talks with, have already given a term sheet from our last TechXpedite edition to Ample.ai, which is doing some fantastic work using AI.
You know, you mentioned that you're already committing a strategic investment for the top 3 startups. What will the size of investment be? And what kind of business or impact metrics will you be looking at when deciding who makes the cut?
So let me talk about the second part first, right? Which is that the impact, which is in our minds, right? There are a lot of problems that we can solve today. Especially, I think there are entrepreneurs coming up in tier 2 and tier 3 cities. They're coming up with some very bright ideas to solve problems for India. And so from that perspective, our biggest lookout will be for the impact that this will cause, that this idea will cause, that the product will cause. And if the impact is large, then everything else we're going to support fully. As per the amount of investment, that will vary from the need the startup has, what they're really looking for, and how we can contribute to them getting the largest shot at success.
Okay. You know, you mentioned the tier 1, tier 2, tier 3 cities, and you're also taking TechXpedite on the road with city chapters in Delhi, Mumbai, Bengaluru, Hyderabad, and Amravati. How important is regional outreach in spotting the next wave of founders, Bhavin?
Extremely important, and the reason for that is, until now, all of our focus has been on the, like you said, the Bengalurus, the Hyderabad's, the Mumbai's, and the Delhi's of the world, right? But I think it's time to look beyond that, because as I was just saying, there are very cool problems that only tier 2, tier 3, tier 4 cities in India are facing, that the tier 1 is not even aware of, right? And this is where some of these entrepreneurs are using these skills, their skills in AI and tech, to solve some of those problems that are niche to them. And that obviously, as we know, that tier 2, tier 3, tier 4 is a large part of our country, our population. Yes. And so there's a huge impact that can be made there.
All right, Bhavin, quickly looking ahead to Pitch Day in February 2026, what are you hoping to see from this year's cohort?
We're hoping to see a lot of startups that use AI in very meaningful ways, right? I mean, right now, a lot of us are using AI. We're using ChatGPT. We're using some of these things to help us answer immediate questions, right? But can you really build AI or a system using AI that'll solve a cool problem, that'll build a moat, right? That so tomorrow no one else can replicate, or fewer people can replicate, because you're really solving it in a very niche, in a fantastic way.
Well, on that note, it's time for me to wrap up our conversation. Bhavin, many thanks for joining us on Startup Street today, and wish you the very best with TechXpedite.
Thank you so much.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on CNBC-TV18. Stay tuned.